Great. So it's great to see you all. Welcome everybody to this webinar. I'm Nadav from Blue and White Finance, and I'm here with Aaron, my partner in Blue and White Finance. Blue and White Finance is your hub in Israel for independent financial education and financial planning focused on young professionals. And I want to emphasize the independent part because Blue and White Finance, we don't take kickbacks or commissions for any products, platforms, service providers that we recommend. And that's because we really want to make sure that our clients and our students are trusting our advice. And that's true also with SimpleTax. So you'll see later on, we'll share in the chat a discount code that gives you a discount for the platform. You'll get a discount, but we don't get any kickbacks ourselves. And the reason that we're bringing SimpleTax to all of you and we're doing this webinar is because we simply just believe in the platform. SimpleTax is unique in the way that it approaches filing US taxes and really makes everyone's life a lot easier and saves money. So we're going to hopefully focus on that as we go along. It's a great pleasure to have Arya and Lior here with us from SimpleTax. I myself was introduced to Arya when I was looking for a better solution for filing my wife's US taxes. My wife is American. We used to file with TurboTax, and it was extremely complicated working out which status to use and how to do the filing and how to get tax credits or income exclusion. And when I came to Arya, he had a look at my past filings and saw that we could have done it a bit differently and got us back a few $1,000s, even from previous years of filing. And since then, we've really been learning a lot about the platform, and I'm excited for you all to learn about it tonight. So without further ado, I'm going to hand over to Arya, and I'll be asking some questions as well as we go along.
Thank you, Nadav. Thank you for the introduction, and thank you and Aaron for hosting this webinar this evening. It means a lot to us. Basically, me as an American living in Israel, who happens to be an accountant, but an Israeli accountant, I had nothing to do with US accounting, other than the fact that I had to file my own tax return. And when I first came to do so, I understood that there was no real good solution, that and my status at the time was just being an employed person living here in Israel. I had to pay 1,000 plus shekel, and I'm talking about over 10 years ago, to pay something which I believed was, I was obligated to do so, but I wasn't getting any gain of it. I didn't have kids at the time that I was getting money for or anything else. And I was a captured client that was paying too much for something that I didn't even want. And when I started working on it and getting into it on my own, and then helping my brothers and cousins and then neighbors and friends, I understood how the market was simply not built for us as Americans living outside the US. And step by step, I started building this, not the platform itself. I built my own practice, and then I was always trying to emphasize on the efficiency, on time saving, and just, having us bring the added value and not just copy pasting your name or social security number, which you could probably do better than I can. And thank God, here we are, 7 years after I started and 3 years after SimpleTax was established. And I feel we're in the right direction. I feel that we're giving here a good solution for what the gap for the market gap that currently is, and hopefully we'll continue to improve. And what we want to do this evening is actually try to combine two things. Number one, we want to show how the system itself works, how simple it is to fill out a tax return with SimpleTax. But we want to do so while touching some important topics that are relevant for for Americans living in Israel. And so the way to do so, we're actually going to be sharing a pre-recorded process of filling out a user on the website. So you could all see that as it's running through. And Nadav and I will have a bit of a conversation on relevant topics as we touch them while going through that video that we're going to be sharing. So without further ado, as Nadav said, let's start with sharing it, and then we could move on from there. Basically, whoever doesn't know, it's just www.simpletax.co.il. That's our website. Click it. You start with a very short opening of a user. We need you to open a user because we do want in further years all your information to be stored and safely stored. And obviously, we're using your most personal information over here, your social security number, your addresses, your income, your children, everything else. So everything on the website is oriented to having your information securely stored. My partner, a lot that I started the company with, is a cybersecurity expert. That's what he does full time. And so that's definitely something that we emphasize on the website itself. You'll also see on the screen right now, we have also a two-step verification that we go through in order to really make sure that everything stays as secure as possible. Once we're in and click 2023, which is what we're going to be using here for an example, we have a very quick getting to learn about you. Okay, it's basically, we have 5 stages in the website itself. We have personal information, finances, credits, FBAR, and then summing up. So in the personal information, we mostly gather the relevant information to know who you are, if you want starting up the client and knowing how to better treat you throughout the process. Very straightforward, very, everything that everything you need for here, you should be able to find on your previous year's tax return. And that's why the way I like working is with working on split screen with the previous year's tax return online open with us. You could see we have your social security number, your kids' social security numbers, your address, everything's over there. And it's simple and very, very straightforward.
Arya,
Yeah,
if I saw there was a question there, did you file your last year's return? Is there a
correct.
problem with filing late? And what happens if I haven't filed the last few years?
Right. Okay. So basically, the issue with filing late usually raises if you owed money. Okay, if you owe taxes to the US, there are no fines for filing late if you didn't owe taxes, unless there was an information return that you would have to report under the FATCA rules, which bear fines. Okay, so if we're not talking about, for example, if you had a very, very high amount of money outside the US, based on what your filing statuses that can move between $200,000 and $600,000 at any point during the year, then if you had over that amount, you would have to file what's called an 8938 under the FATCA rules. Same goes if you were holding a CFC, if you were holding a company outside the US, an LTD, okay? So you have reporting to do to the US because they want to know about that entity that you have. So these are things that would require additional filing that if you didn't file them on time, you would get fined for. Okay. But if you're not under that situation, and over 90% of the population is not under that situation, there's no real issue with filing late. There are 2 things that I want to touch base on with respect to this specifically. So the first one is specifically for 2023, because of the war, there's an automatic extension that applies to anyone living in Israel, okay? And this is specifically for Israel, in which we have an extension until October to file and pay our taxes to the US for the 2023 tax return, okay? Now, this is extremely unique. I've never seen anywhere in the US tax code that they gave an extension to pay. Okay, so even when we did in the past get automatic extension from April to June to file, and then we had an option to extend with filing an extension until October on a regular year, it was always an extension to file our tax return. But we always, always, always had to pay taxes by April 15 if we had any tax due. Okay, and for this year specifically, because of the war that's going on, we have an automatic extension not only to file our tax returns, but also to pay that tax, any taxes due if we owed any money. And that applies also to the 2023 tax return itself, but also to the quarterly estimates that we would otherwise have to pay in April, June, and September. We have an extension for those as well until October of 2024. Okay, so that's number one that it's important to note. And the second thing that's relevant for extensions and for filing on time, if we have children that we did not have a social security number for them on time, we cannot claim them as dependents in our tax return, and we cannot get refunds for them as child tax credits, COVID for the relevant years, and so on.
Which is a lot of money.
which is a lot of money. Okay, it could be for several years, it was over $2,800. It was $2,800 for one given year per child. Okay, if we're looking at 2021, for example. For 2023, it's $1,600 per child that you could get as a refund. And what is defined as having the social security number on time is having the social security number by the last filing due date. Okay, so it doesn't matter if you filed the tax return on time or not, but you had to make sure that you were getting the social security number on time. For years, not like the current one where we have an automatic extension, if you wouldn't file an extension from June to October, and then let's say you got your social security number on July, you would lose out on that child. So yes, it is important to be on top of our filing timing to make sure we're not missing out on any benefits that we are entitled to, and also that we don't accrue any penalties for late filing if we owe taxes or have information returns that we would have to file otherwise.
And we had that personally for a Corona year, a child born in December. We didn't get the Social Security in time and missed out on those larger payments as well. So
Indeed,
it's
indeed,
worth
I
paying
have.
attention to.
Yep, absolutely one of those things that we need to be aware of in advance. So
Cool.
basically, while we are speaking, we finished filling out the personal information part of the tax return, and we're moving on to the next stage, which is talking about the types of income that we have. I'm going to scroll back just a few seconds. When we talk about the types of income that we have, there's a very detailed list to make sure that we're covering all positive inflow of income to our bank accounts. Okay, we want to make sure that we are literally covering everything in terms of work, in terms of investments, in terms of gifts, inheritance, whatnot. When we have income, it's very tricky what's considered as taxable income and whatnot. So at SimpleTax, in order to make sure that no mistakes are being done, we ask you to give us a full disclosure of every type of income that you had. And then obviously later on, we'll analyze each and every type of income and tell you if it's taxable income, if it has any exclusions that we could use in Israel, if there are any treaty benefits that we could use in order to not pay taxes for them. There might be even things that will tell you, okay, thanks for letting us know that's not even reportable. We don't need to touch it. But in order for you to be able to feel comfortable that we covered everything, we're asking to give us the entire picture and we can move on from that. I'll just say that the showcase that's being demonstrated on the background, we took someone who has also a 106, meaning an employee, also an 867, a investment here in Israel, and also a 1099, an investment in a broker's account in the US. So we want to show a bit of a broader types of income, a variety of types of income, so you could see how to do different stuff, and you could see that indeed the process itself is not overcomplicated, and it's something that's easily done. Moving forward, after we have the income, we also check if there are any expenses or special credits that we should be aware of. We'll touch on that a bit later. But when we talk about bringing in the information, and Nadav was speaking earlier about using other software not Israeli based in order to prepare a tax return, one of the biggest issues is that when we get our Israeli documents, the 106, the 867, and so on, we get them in Hebrew and we get them in shekel. And we don't always know what exactly we want to take and how we need to do it and how it should be shown on the U.S. tax return, which is obviously in English and it is in dollars, not in shekels. And on the platform itself, we really walk you through step by step what exactly you should bring us, including pictures, including snapshots of relevant Israeli documents that you could see in red circles. This is what we're looking for. This is how we want you to put it in. We won't ask you anywhere to convert or do anything else of that sort. We're going to be doing all of that for you. Okay. If you got a document in shekels, give it to us in shekels. We'll take care of the conversions. We will ask you to write, for example, the employer's Hebrew name to write it in English letters. So that could go straight into your tax return, but you don't need anything other than saying, okay, if it was Chevrat HaChashmal, I worked for Chevrat HaChashmal in English letters. That's as complicated as it gets.
Well, so I can see here one of the fields that you're filling out is the 218, 219 relates to Kernish Talmud. Whenever we have US citizens that are coming to us and they just made Aliyah, often they're using their US accountants that are in America. That is always a red flag for us because the accountants in America have no clue what Kernish Talmud is, no clue what pension is. And it's worrying because when they ultimately take out their Kernish Talmud, for example, it might be free of tax in Israel, but in America, potentially taxable. So do you do anything special and how do you file the Kernish Talmud to make sure that tax is limited as much as possible?
So yeah, I'll start with saying, because this is a great opening for that. As dual citizens, our biggest issue is where we have exemptions or benefits in one country and the other one doesn't follow the same type of exemptions or benefits, okay? Because we do have a tax treaty between the countries, and the tax treaty is set to make sure we're avoiding double taxation and getting credits from one country to the other. But our issues are where we have an exemption in one country, for example, when we have a Keren Ishtalmut, and then there, after 6 or 7 years, I could withdraw my Keren Ishtalmut completely free of tax in Israel. And then the US come along and say, okay, that's nice, but I don't have such an exemption and I want my money. Now, when I pay taxes in Israel, that's great. I have a credit and I could use it against the US. But when I was building on getting, a nice amount of money out of my Keren Ishtalmut and planning to use that money as a net amount because I was always having in mind that it was free of taxes, and then the US come and say, well, give me 20% of that cut, that could be significant. And what we try to do, and here we're also getting into a little topic that I'm not going to dive too deep into to not tire all our audience, but in general, there are a lot of interpretations of how exactly the 106 form or the Israeli income form should be read. Okay, how each field should be treated and whatnot. So in order to try to simplify things, because that's what we try to do here, we set a base way that we work with. And then afterwards, we check if that would bring us to the best case scenario, and otherwise we would change it. And to explain just a bit more, as a general case, what we do is we take all the salary, the gross salary, because that's a given. There's no discussion of that. That's subject to tax. But then we add in also the employer's contributions to pension funds and to Keren Ishtalmut. Now, also on the Keren Ishtalmut itself, as you mentioned over here, you could see, I don't know if you're able to see it, it said there's over 170,000 shekel. That's not how much was distributed to the Keren Ishtalmut. That's just the amount according to which they made the calculation of how much should be distributed. So if you just took this as a general document and went to U.S. accountant who doesn't know how to read it, he would probably give you 90% more income than you actually have to be showing. Okay, so that's things that we take care of and we don't tire you with. But in general, what we try to do is build a small basis for the Keren Ishtalmut contributions so that when you have a withholding of the Keren Ishtalmut 6, 7, 8, 10 years from now, you already had paid taxes for it using the Israeli credits. Now, I know it sounds a bit Chinese, and I'm more than happy to elaborate, but I don't want to overwhelm. But in general, what it means is that there is a possibility that when we withdraw this money in the future, it's going to be exempt in Israel, but we also won't have to pay tax in the US, or in some cases, even if we do have to pay, it's going to be much, much, much less than you would anticipate paying if you would just say, okay, I just got 100,000 shekel of additional income. So basically, yes, we absolutely work around those numbers. We find the best way around. We have like a straightforward way, and then we check case by case to make sure that indeed it also suits the specific client who's using the website at that time.
And so maybe I'll summarize what you said in some other words. Essentially, you're reporting all the contributions, so that we're paying tax on them early, but we usually have enough credits to cancel that out. And then eventually, when we take out the money, in many cases, it might be tax free.
Exactly.
Yep. Okay,
Exactly.
cool.
Okay. Moving on, we're moving on to the 867. So basically, other than active income, what we call, income from work or income from self-employed, we also have in many cases other types of income that would be money that we have sitting in the bank, rental income, if we sold an asset, investments in virtual currency, and so on. A lot of people are trying to, see how we fight the outrageous prices in Israel by earning some additional money in other ways. And that as well has to be reported in the US, as does it need to be reported in Israel. And so when you have an investment in Israel, you get a form called 867. And when you have an investment in the US, you get a similar form. It's just called 1099. So we have one for Israel. And like the 106, this one as well is in Hebrew. And as you can see in the background, it's got many, many tables and a lot of numbers and check boxes and a lot of big fancy words, which could be overwhelming. Okay. And so what we try to do is literally mirror on the website what you would be seeing on your 867. So you could just look for those anchors and put them in one for one, very, very simply. You don't even have to understand what you're doing over here. You don't have to get into the information, the details. Just find the correct row, the correct table on each, the correct column on each and every one of the tables. Copy the numbers in shekels as they appear on the 867 into the SimpleTax website, and we'll make sure to analyze all that information that you've entered to make sure that we're reporting it in the best and most tax efficient way possible on your US tax return.
Cool. So with the 867, there's one thing that always, is tricky when Aaron and I are thinking about advice for our clients, because when we have US clients coming to us who want to open up a brokerage account and invest, we tell them generally they should invest in US ETFs, in US stocks, because of various IRS restrictions, PFIC. But then the question is, should we open up a brokerage account that is US based, or should we maybe invest using an Israeli brokerage account or an Israeli bank? One of the challenges seems to be that when you use an Israeli entity, they're going to withhold all the tax. But according to some interpretations of the treaty, some of that tax maybe shouldn't have been paid to Israel, but rather to the US. And then suddenly we get into all these complexities about trying to get it back from the Israeli government and then paying it to the US. How do you approach that? If for somebody that is using an Israeli brokerage or an Israeli bank to invest in, let's say, US ETFs?
So I think you really nailed the key word, interpretation. Okay. As I said before, we're looking to simplify things. Yes, it could be tricky, it could be complicated. There could be many, many ways to interpret how exactly this should be done in terms of what the tax lawyer, the tax accountant like to use first bite. Okay, who gets the first bite on my taxes? Do the US or does Israel, because of that unique situation where we're US citizens but living in a different country? And one of the broader interpretations for the tax treaty itself, without getting into specific articles, is that because the US is the one that's out of the ordinary over here, okay, most countries in the world, they tax you based on residency. And the US is the one that's out of place over here and it's taxing you even though you didn't live there, you didn't generate any money over there, you didn't work over there, you didn't benefit from any of the US, infrastructure or anything else over there. So the tax treaty itself gives, again, this is an interpretation, but gives the responsibility to the US to make sure that we're not taxed double. Okay, it means that they're entitled to whatever taxes that they're entitled, and Israel is entitled as well. But if there are any misunderstandings or places where it's not completely sure who should be getting the first bite and whatnot, that the U.S. are the ones who have the responsibility to be the more the one who makes sure that we're not paying twice. Now, taking this interpretation says, okay, yeah, well, Israel wants to tax me for these US ETFs because I live in Israel and I reside in Israel. And it's also, we're talking about an Israeli bank account. And on the other hand, the US are saying, well, you're a US citizen, but this is also US ETFs, and we're the ones who's supposed to get first bite. Our interpretation is if you want to go simple and have good grounds to do what you're doing, obviously, we're not talking about anything that's illegal. That's not something that's on the table. Let Israel enjoy the taxes, come to the US and say, I've already paid taxes for this in my resident country, and I'm going to take a credit against the US. Now, one more thing that helps us feel more comfortable with this position is the fact that the number of tax returns that are actually audited is so incredibly low that if you're not asked about this specifically within 3 years, it's gone and they can't touch it anymore. So if you're not asked about it, which is most likely what's going to happen, you're fine. You paid all the taxes you needed to. You just paid in one country and credited the other, and you move forward with your life. If by any chance you are asked about it, you didn't do anything illegal. You worked based on the tax treaty. And worst case scenario would be that the US would come and say, well, we're not willing to accept this interpretation. So no fines or anything because you had something to rely on. But yes, pay us the money now and then go ask Israel to refund you for it.
Yeah.
But I wouldn't, to start with, okay, I'm going to ask Israel for a refund, go pay the US, but wait, I need to pay the US first in order to be able to ask for the
The amount of
refund.
work to
And
do that. Yeah.
it's completely crazy.
So that
I will,
simplifies it a lot when you're using the platform.
yeah, I will say one thing that's important to note. If you want to be 100% by the book to the dot, by the letter, the right way to do it would prepare both Israeli and US tax returns at the same time without filing any one of them. Okay, finding the bottom line for each and every one of Israel and the US, seeing how much money you owe the US, seeing how much money you owe Israel, figuring out the first bite between the two countries. This is the place to say when you're talking about interest for taxes on a US ETF that distributed dividends, for example. It's not that I have a set number of how much taxes I owe. That would be based on how much your other income was for the year and what your filing status is and how much deductions you had and whatnot. So it's not that I
By the
could
way,
say
is a very good point for people living here because Israeli dividend taxation is a fixed, in most cases, fixed 25%. A lot of people don't
exactly.
realize that it's so much more complicated in the US.
Exactly. So if I were in a position where I could say, okay, I got $1,000, I know I need to pay $250 to the US, that, I might have approached differently. But the fact is that I don't even know how much taxes I owe the US for those $1,000 means I can't even file it before I finish my tax return in Israel to get final numbers. And that's why I'm saying, yeah, I mean, if you want to be, diligent all the way, yeah, that would be the right way to go. I personally feel it's completely overkilling it. I'm not talking about situations where we have $1 million investments. I'm talking about I have a few $1,000s. I want to invest it. I don't want my money just to be wasted. For that to go crazy about accountants and working and whatnot, I feel is completely out of place, and I feel
I think
really
that makes
comfortable with the
sense.
position we have.
So to round off, I guess, that topic, what about a case of somebody who is past their 10 years and they've got an investment in a US brokerage? And so generally, if we look at Israeli taxation, when you have an investment after 10 years in a US brokerage account, we have to do filing in Israel in order to pay what we need to pay to Israel, but we also have to do filing in the US. And that can sometimes be an annoying juggle for clients. Sometimes they'll go to an expensive accounting firm that has both Israel and the US to get around that. How would they deal with that if they're using SimpleTax?
So the straightforward answer would be I would do the same as having the 867, because again, Israel does have a right to tax also the U.S. income, even though it was generated in the U.S. And so I would always recommend doing the Israeli tax return first,
Israeli first.
paying whatever tax you have to pay in Israel. And then when you come to file your US tax return, you're going to say, well, I have a credit in the US and in Israel to use in the US. So even though I already had taxes withheld in the US, give them back to me as a refund.
Okay.
Okay. I will say again, we're live over here and there are many people over here and each and every one of them has his own unique situation. If you're not 100% sure, we have a WhatsApp button on the website. You could see it in the center of the screen right now. Click on it, ask us. If it's straightforward, we'll answer you. If it needs more than that, we have consultation sessions that we give to explain these things, and we could analyze your specific situation to make sure that indeed it meets what we've discussed now. But in general, that's what I would be doing.
Right.
All right, so moving on, after we've done D867, we're now jumping on to 1099, which, as we said, is similar in nature to the 867. But in order to try and simplify things, obviously the US made everything more complicated
What
because that's the
what
way
what
they
is the
work.
1099? Maybe just clarify what the 1099 is.
Okay, so as we said before, the 1099 is similar to the 867. It's a statement you get from your US bank account from your broker in the US, which has details of all the income you generated in that account throughout the tax year. So in Israel, you have the 867, which is one long form, and it has sections inside it. The US, they broke it down into three forms. They have a 1099 DIV, which covers all the dividend section, and then they have a 1099 INT, which covers interest income. And they have a third one called 1099B, which we could currently see on the screen, which covers all the capital gains. If you had sale of assets that generated income or losses, that would afterwards be reported on your tax return. I would like to point out over here that in Israel, we have something called revachon. Straightforward. You purchased something, you sold it, you generated profit, you pay 25%. Game over. In the US, completely different. We have short term and then we have long term. We have basis yes reported to the IRS, basis not reported to the IRS, and we even have in broker accounts a section of we're not sure if this was reported to the IRS or not, even though you're the broker and you're supposed to know. So whereas in Israel, usually the 867 section would be closed in one small table, in the US, it will go on and on and on for pages. What we do is, and we do this based on an actual guidance that the IRS has issued. When we have 1099s that we got from our brokers, we're entitled to aggregate the final numbers of how much were sold, how many assets were sold, how many investments were sold throughout the year, what the bottom line of the total cost of those assets was, and put that as a number for calculating the overall profit that we had from those assets. But we have to break it down into short-term investments and long-term investments. And within those short and long terms, short terms that were reported versus not reported, and long terms reported, not reported. But at the end of the day, worst case scenario, we'll usually have not more than 4 lines for doing all of them. And in most cases, it's usually just 1 or 2, versus a situation where we'd have to run through hundreds and maybe even thousands of transactions that our broker did on our behalf throughout the year. So it definitely simplifies the entire process, makes everything much easier to work with and also much easier to handle at the end of the day.
Cool. And does everything rely on me copying numbers into the platform? Do I also provide you with the forms to review? How exactly does that work?
So yeah, we throughout the process, at the bottom of every page or almost every page, we ask you to also upload a copy of the form that you use in order to report whatever you're reporting. So we'll ask you to upload a copy of your 867 and a copy of your 1099 and the copy of your previous year's tax return and everything else. We do that so that when we review the tax return at the end of the process and we look through it, if we see anything that doesn't look right, we know exactly where to go. And yeah, there are situations where we'll find that there was a typo, that something wasn't copied correctly and stuff like that. And then we're able to work on fixing it. We have also started implementing automatic red flags that jump up. Okay, just one example, if we were talking about the 867, if we're talking about the 106 before, and we were saying that we had a keren ishtalmut, we saw that we had that 218 or 219 field that indicated that our employer had contributed to a keren ishtalmut on our behalf. Then when we reach the F bar section, if I click that I finished the F bar, but I didn't indicate that I had a keren ishtalmut, we'll say, by the way, we know you have one because you indicated that your employer was putting money aside. Make sure that you're going and getting the information for that before we move forward. So that's just one example, and we're doing more and more of them as we go through to make sure that indeed we're not missing out on anything. And obviously, yes, we still have review of the tax returns at the end of the process, and if we have anything that doesn't look right, we could A, check the documents that were provided, and B, reach out to the clients and verify with them. Okay, so we basically finished the first 3 sections, which were personal information, covering the types of income we had. And we're now, sorry, the first two sections, and we're at the third section of the credits. Basically, what we're doing when we file a tax return is we're trying to find out what our taxable income is, or in simple words, what our profit was, okay? Because the IRS want to know how much taxes we owe based on how much money, how much profits we made. Once we know how much taxes are owed, we want to see if there's any way to completely eliminate those taxes, not have to pay them. Hopefully we'll be able to, and hopefully we'll also be able to turn that into a refund by using credits. So the credits are broken down into two types. We have non-refundable credits that their entire purpose is to lower our tax due and hopefully completely eliminate it. And then the second type is what's called refundable credits. And the refundable credits, they continue digging in also after we pass zero. So we could find ourselves in minus $1,400 of tax, which means we're going to be entitled to an actual refund being sent our way in the form of $1,400 that are going to be either deposited to our US bank account or in paper checks sent to Israel. So in the credit section, we run through all of those things that are relevant for people living outside the US. Okay, so the first and foremost is a foreign tax credit, meaning if I already pay taxes in Israel, I want to have the foreign tax credit in the US and not need to pay again. That's the first one. But other than that, we have child tax credits and we have child care expenses credits. And we have the Corona credits that were relevant for 2020 and 2021, and we have student credits. So the system itself will run you through all of those various types of credits to make sure that we're covering everything and that we're not reaching any tax due and hopefully even getting a refund and having it as high as possible. I will mention at this point, we were talking about the foreign tax credit. For Americans living outside the US, we basically have two main ways to avoid taxes in the US. The first one is the foreign tax credit that we just discussed. And the second one is something called the exclusion of foreign earned income. The exclusion of foreign earned income is a tremendous benefit that the US government gives to people living outside the US who have not visited the US too much during the year, saying if you made money outside the US, we'll literally just exclude it from your income. So you'll see at the top of the form, okay, I made $100,000, but then a few lines later, it's going to say, well, minus 80,000, which is the income that you generated outside the US. And when we use that option, it's great because it simplifies things. But on the other hand, if you did use that option, you're not going to be entitled to get refunds. If to use an Israeli phrase, a Hebrew phrase, it's lo meduvshech velo muktzech. Okay, it's okay. We won't owe taxes, but don't come knocking on my door asking for benefits afterwards in sense of child tax credits and things of the like. So the system itself is gonna try to decide what is gonna determine basically what your best filing status is and what your best credit or exclusion route would be based on would I be able to get a credit that I'm otherwise forfeiting if I didn't go using that route. And so the system is built to do it on its own, and it knows how to find it and knows how to ask all the relevant questions. So that's nothing you need to be worried about, just something you should know that's being covered.
Yeah, that was as I mentioned, it was the hardest part when, using TurboTax and trying to work out which approach to take, and that'll completely change the way that the reporting is done. It's to have that done automatically is a big difference.
Yep. Okay, basically after we finish the credits, we've completely finished the tax return or the financial side of the tax return itself. But as citizens of the US living abroad, we have another reporting obligation, which is called the FBAR. I'm pretty sure most of the people on the webinar with us today have heard of it and have suffered from it in the past. But in general, and very high level, it's reporting of financial accounts we have outside the US if we had over $10,000 in total at any given moment during the year that we're reporting. So a financial account can include your bank account, your pension fund, your Keren Ishtalmut, a provident fund if, God forbid, you had one of those by mistake, and any other type of financial account that you held outside the US and that you're required to report. We make it very simple. We take only the information we need. We also explain where to get it and how to find it, and just bring it in. You'll see we also built a database with most of the financial institutions in Israel. So you'll be able, and you'll see it on the screen in a second, you'll be able to just type a few letters out of the name of the financial institution that your bank is held in, for example, and it's going to fill in all the address and the other things. So, for example, you could see here the First International Bank. I just click on it, and it's going to fill out underneath. Once I put in which branch it is, it's going to fill out underneath the branch's address and so on. So also over here, something that is very, very annoying and tiring. We're constantly looking for ways to make it easier. And you'll see also a button on the bottom that if, for example, my Keren Ishtalmut and my pension were held both in Migdal or both in the Phoenix at the same place. So if I filled out the information for one of them, I don't have to do that again. I would just have the duplicate button on the bottom for you to put in any additional account you had at the same institution. And then all you need to do is choose for the first one, the pension, and the second one, that's a Keren Ishtalmut. For each one of them, put in the proper account number and then the maximum amount, and you're done with that. So that's in general about the FBAR. One thing that I would want to emphasize when we're talking about the FBAR, yes, the FBAR is annoying. And yes, we've been frightened about the FBAR for years, that they're fined, and if you don't file it, it's horrible and it's terrible, and it's all true. However, to date, we've not really seen fines being applied for not filing FBAR on time. I'm not saying that to say that you shouldn't file your FBAR. I'm saying that it's true that it's scary, but that's not my biggest concern. There's a bigger concern, and it's called the FATCA reportings. We touched it very slightly at the beginning of the webinar when we were talking about filing late. The FATCA is basically the US wanting to gather information that's not the tax return itself about its US citizens' assets outside the US. And the 8938 is a form that you have to file out for FATCA, which is very, very similar to the FBAR, but it's on steroids. Okay, so if the FBAR, the threshold is $10,000, for the 8938, the threshold starts at $200,000. Okay, they're not going to check each and every one of us like we do with the FBAR. It's only if you have a more significant amount of assets, of financial assets outside the US. However, if you didn't file an 8938 on time, there are fines, and these fines are actually applied. Okay, we have clients who've actually got a letter demanding $25,000 as a fine for just not reporting something that they had to. There was no tax due. They didn't miss out any tax payments. So we do have an option on the website to say I filled out the FBAR on my own and skip this section. Our recommendation is still fill out the information over here to be sure that you're not required to file an 8938 and then missing out on an obligation that you have. And also, we do it for free. We don't charge more for the FBAR for whoever does a tax return with us. And the information is going to be stored for next year. So it's going to simplify the process for next year as well. Really a warm tip from us, fill out the FBAR section. Also, if you're not required to file it, you could at the end of the process say, I did this already, don't click file, but be sure that you're putting in the information. And that's basically it. Yes.
You've kind of shown what it looks like to put in all the information. What happens next year after kind of I've already put in all my personal information? Does it save it all?
Yes, absolutely. And that's one of the reasons that we've been putting such a big emphasis on the security of the information, because we want to store the information. We want to keep it so we're able to make your life much, much simpler next year. And we can't do that if we don't have top-notch security set in place. But after we put that aside and you can know that your information is being safely secured, What happens next year is when you come into the tax return, it's going to say, okay, I know you from next year. I already have your name, your social security number, your birthday, the names of your children, your address, if you're married and if your wife is American or not, your employer's name. Okay, like even to that extent, what his tiknikuim is and what his address is, all of
Everything.
that process is already saved, it's already stored, and it's presented to you on the website. Now, we will ask you to skim over it just to make sure nothing changed. But other than that, it means that the entire 10 minutes of this webinar where we are showing how you're filling out personal information and your employer's name, that's already done. So 2 minutes after you started, you're already going to find yourself filling in the actual financial information from your 106, from the 867. And 2 minutes later, you're already going to be at the FR section. And there as well, all your bank accounts information and your pensions and Keren Ishtalmut, and all of that is going to be already stored. All you need to do is add in your highest amount for the current year and indicate if it was closed during that year so we know if yes or not to update it for the following year. But that's it. So if it would take you, I mean, someone being, if you had zero clue of how SimpleTax looks and you started from zero and you had, for example, the types of income that we just discussed, I'm assuming if you came ready, it should take between half an hour to an hour. The second year shouldn't take more than 15 minutes. Okay. And so yeah, it's absolutely aimed at making everything simple, making it easier. I could even tell you that no promises, we're working on technology that will be able to even read out your documents, so you won't even have to take out the information from there. We still have some work to do on that, so it's not something that's going to be presented in the near future, but it is something that's under process. And so yeah, we're always working on trying to improve the process to make it as really simple as possible.
Right. I mean, I've got one more question maybe before we open up to the audience.
Sure.
Probably
Uh,
the
so just
yeah,
before that, because we
yeah.
literally have like a few seconds left for the website itself, just so you know how you finish up. Um, Once we finish the FR section, we have a few technical questions that we need to run through. It's not a lot. It's like 5 or 6 questions at most. Um, some of them are meant to make sure that your identification is indeed you are the person you say you are. Some of them are asking if you have a bank account in order to get a refund, or if you want your taxes, if you owe taxes, paid directly out of your bank account. But that's basically it. So you can see over here we have these last 5, 6 questions, and what happens after you fill them out? Sorry. Um, what happens after you fill them out? You click continue, and you're on a summary page telling you exactly what happens next. After we pay for the service itself, we have a automatically generated template of the tax return being presented right away. I'll stop the share right now so we could already discuss other matters. But you have a template of the tax return already displayed on site. You could review it, see if you have any comments. If not, it's sent on to our end to also review it. It takes us usually around a week to get each and every tax return. When it's busy season, it could take 2 weeks, but usually we try not having more than 7 to 10 days, and hopefully 7 days for us to work on your tax return. If we have any questions, great, we'll let you know. But otherwise, you already are able to sign on the website itself that we could file on your behalf. And that's it. We do the electronic filing for you. We'd let you know that it was filed. We'd let you know that it was accepted. We'd let you know when we expect your refund to be sent to you, and we track to see that the refund indeed was sent. So all of that happens on the website, and you get notifications as the process goes.
Very cool. Great. So yeah, my last question. The large majority of employees, anyone here on the call that's an employee in Israel, probably won't end up owing tax to the US. But the population that really suffers from, this whole arrangement are Atzmaim, because they need to pay the Social Security, the self-employment tax, and often that can be a significant portion of their take-home income. And so there are all sorts of solutions that Atzmaim try to find. Should they use a payroll company? Should they open up their own company in Israel? Should they structure in some kind of different way? Is SimpleTax able to provide guidance on that? How can SimpleTax help Atzmaim minimize their obligation?
Okay, so we have two options. We have current clients of SimpleTax that we're already privy to their information and we know exactly what their status is. And then we have people who reach out to us who want to know what to do. At the end of the day, the answer would be the same. We have to understand specifically what your situation is. So if you just WhatsApp me, what should I do? Should I open an LTD? I can't answer because we really need to understand your specific circumstances. It's not just a question. It's usually a question of money, obviously, how much money you intend to make. But it's not only a question of how much money you're making, it's how much you're profiting. Okay. So if you're someone who opened an LTD just in order to provide services through it and you don't have much expenses, that's one situation. But if you're someone who has inventory, that's another situation. If you're someone who works from home and you have expenses such as rental and stuff like that, that you would be able to otherwise include on your tax return, that would be great. You wouldn't want to forfeit that if you work, out of, you own a house and you're not paying a mortgage and you don't have these additional expenses. So that's not something to take into account. All these things at the end of the day will influence how exactly we would recommend structuring your business in the most tax efficient way, taking into account both the Israeli and the US side of things. Just a thought on that. Both Lior, who's here with me, and Lior's a Israeli lawyer. I'm an Israeli accountant. We're very, very familiar with the Israeli tax laws. We don't provide Israeli services, but we know exactly how the Israeli tax system works. And so when we provide consultancy on U.S. tax matters, we take into account how Israel would react to that. So we might say, okay, this you should be verifying with an Israeli accountant just to make sure that nothing changed or how exactly the technicalities would work. But that's definitely something that when we come and say, okay, so you should open a chevra ba'am, take into account, for example, an accountant in Israel for holding the chevra ba'am could cost you over 15,000 shekel a year. If you're saving 5,000 shekel on self-employment, but paying 15,000 shekel for fees, you're losing out. You're not doing anything. So basically, you've touched most of what covers most of the situations, either continuing to work as self-employed, moving into what's called a pay slip company, or actually opening your own LTD and working out as an employee from that company. How, when, where, in what exact structure, that would definitely be based on your specific circumstances.
And you can provide consultations on.
Absolutely, absolutely.
Okay, cool. So should we open up to maybe a few questions?
Sure.
Great. So, I mean, Lior, Aaron, were there questions that you want to bring forward before we kind of take verbal questions?
Yeah, maybe talk about a bit of being a Ole Hadash, US tax wise, which is, Ari, if you want to talk about it.
Sure. Basically, when we're talking about Olim Chadashim, so I like to split it into two. There are the Olim Chadashim on the year they moved to Israel, okay? And then there's the 10-year exemption that we have in Israel afterwards. So obviously, the more tricky part is that year of moving, okay? So part of the year I lived in the US, part of the year I lived in Israel, part of the year my income was from a W-2, and part of my year from a 106. A lot of things that we spoke, for example, about the exclusion of foreign earned income on 2555. If you moved to Israel only after February or March, you're no longer entitled to that for that specific year. So all these things are things that need to be considered. And the what we were talking about earlier about the first bite and the responsibility of the US to make sure you're not paying double taxation, that wouldn't apply for the time that you are physically in the US working for a US company and so on. So that year of making Aliyah is a bit more complicated, and we would definitely suggest reaching out, having a short sit down to understand your exact situation, who you're working for, where you expect getting your money from, what way you're going to be getting your income, and so on. And also us trying to simplify and clarify how things would work now that you're living in Israel and under two tax authorities. So that's for the first year of making Aliyah. Okay, that's definitely not something that could be covered, in one shop fits all. Okay, one suit fits all for everyone. Yeah.
We do have questions on the website saying, when did you make Aliyah? Where, if you received a W-2, did you work from Israel or from the US to get your W-2 income? So we do have questions on the website that can point out to the fact that you actually made Aliyah this year. So don't worry about it. You do have to report all your income regardless to where you were an Ole Hadash or not an Ole Hadash in Israel, in the US. That's, I believe, the second part you want to talk about.
Right. So the second part is what happens for the next following 9 years. After the first year, as we said, was a complicated one. The next following 9 years, Israel has outstanding exemptions for Olim Chadashim, for passive income that you had outside the US, for active income. If you worked physically outside the US, the current exemption is both on reporting and on tax payments. They're currently trying to change that you will still have to report in Israel, but they're still keeping the exemption, at least for now, for the money that you're going to be earning and not having to pay taxes for that in Israel. And it's definitely something to take into account, okay? Because if we were talking about earlier about the fact that at the end of the day, our issues arise when you have an exemption in one country and not in the other. If I have all my passive income, for example, outside of Israel, and I'm exempt in Israel completely, then I could in total enjoy those benefits and not worry how Israel's going to react to that afterwards. So I'm going to say for most people, it doesn't really make a very big difference. We don't usually have, hundreds of thousands of dollars staying in the US after we made Aliyah. But if that is your situation, there's definitely a lot of room for planning and how to properly make sure that you're benefiting for that exemption that you're getting in Israel for being an Oleh Chadash. Were there any other questions that came in the chat that we should be talking?
No.
Aaron, anything on your side?
I think you guys really covered all the questions. Aryeh, you on the video, you on the chat, you really answered all these questions. Really went through everything. So I just want to thank both of you guys, Nadav, for all the questions that you came in, and everybody for coming. This was very, very informative. I hope everybody found a lot of value here.
Thank you.
And yeah.
Good to hear.
Nadav, anything to close it out?
Yeah, well, thank you for joining us. I think being able to bring a platform like this to the US dual citizen population makes it just that much easier for people to be able to approach finances and get their head around finances in general. If we want to take, I see someone else just asked another question. If we want to take maybe one or two more.
Yeah, sure. So we see, I see they're asking about the pension and Keren Ishtalmud and how exactly it works. Very, very, high level, briefly to explain. When we have a Keren Ishtalmud they both work the same, it's under the same idea, just the Keren Ishtalmud is for a short term of 6-7 years, and then the pension is usually for your entire working period of life, and then afterwards becomes relevant in 30 years from now or in 20 years or depending how old you are. But in general, what it is, it's putting money aside every month and every year and then benefiting it from in Israel tax-free or at reduced tax rates when you withdraw the money. The US doesn't confer, okay? The US doesn't say, well, the US looks at it and says, okay, great that Israel gave you a discount or an exemption, but I don't follow the same and I want my money. And so what we try to do when we're working on the 106 is take that information and try to build a tax basis. It's what it's called, okay? So we're saying if we take the Keren Ishtalmud, for example, it's comprised of 3 components. It has your contribution, okay? Sorry, if we're talking about a pension. It's comprised of your contribution. It's comprised of your employer's contribution on your behalf. And then there's a profit that's generated off of that over the years. Whatever you're contributing to start with is your money. You don't owe taxes for withdrawing that money down in the future. So that's already a portion that we could say is tax-free in the US, regardless of any treatment, any treaty or any benefits. The next portion is what your employer put in every year. And for that, what we try to say is because the tax rates in Israel are usually higher or because we have deductions or credits that we could use and benefit from, let's add that into your employment income. as if it's part of your taxable income, not actually pay taxes for it because we have these deductions and credits for what we paid in Israel. And then when we come and withdraw from the pension in 40 years from now, we're going to say, okay, well, 70 or 80% of this was already taxed, okay, because part of it was mine and part of it my employer gave to me and I reported that year and had as taxable income, bringing us down only to that last 20, 30% of the entire contribution of the entire withdrawal that is actually profit and should be taxable. And when we're bringing that amount down, in a lot of situations, we'll also have deductions that we could use in that specific year of withdrawal to not pay or to pay very, very low amounts of money. I know this is high level, but I hope that's helpful. Were there any last question maybe? Anyone? All right, then. Thank you, everyone, for joining. And thank you, Nadav and Aaron, for hosting this. And thank you, Lior, for the help and responding on chat and everything and giving your helpful insights. And we look forward to being in touch. Have a good night, everyone.
Have a good evening. Bye.
Bye-bye.